The current price for Hyperscale Data Inc., also known as GPUS, is $0.447, reflecting an 18.58% drop in the last reported trading session on Wednesday, October 29, 2025, with the market now closed. The previous close was $0.549. This stock is highly volatile, and the intraday range for that session was between a low of $0.392 and a high of $0.480, demonstrating the kind of rapid, sometimes brutal swings investors in this company have to manage. Now, the common expectation is that this double-digit decline is simply more of the usual noise for a stock trading in the micro-cap range, especially one so closely tied to the volatile Bitcoin and AI narrative. However, the reality is that the steep drop comes immediately after a major announcement about expanding their Bitcoin mining capacity with an order for 2,000 new Bitmain S21 Pro miners, adding to 2,099 S21 Plus miners already in play. This counterintuitive price action, selling off on what sounds like a fundamentally positive capacity doubling announcement, is the key insight. It suggests that the market, for all its love of the AI and Bitcoin story, is prioritizing other, deeper concerns, likely related to dilution, execution risk, and the company's overall capital structure and classification. The friction between narrative and technical reality. The Hyperscale Data stock story, the one that makes people interested in the first place, is a straightforward, high-growth modern tech narrative. AI data centers paired with a large-scale Bitcoin treasury strategy. They aim to accumulate a $100 million digital asset treasury, and their Bitcoin holdings have already climbed substantially, recently reaching $68.8 million, including cash allocated to committed purchases. They're deploying a strategy of dollar-cost averaging into Bitcoin, and are rapidly building out their Michigan facility to house both their NVIDIA GPU cloud offering and the beefed-up Bitcoin mining operation. This sounds like a company trying to hit two of the biggest sector momentum trades in the market right now. This is the expectation, a powerful synergy of two high-multiple growth markets. But the reality on the chart is a stock that has plunged over 90% in the past year, trading as a penny stock, and is prone to massive, violent daily swings. The recent negative 18.58% drop is a stark reminder that momentum and narrative alone do not sustain share price, particularly when institutional activity suggests a heavy focus on immediate liquidity and capital concerns. The colossal trading volume accompanying the recent move, hundreds of millions of shares changing hands, underscores that this isn't just retail investors trading small lots. There's significant institutional churning, likely driven by selling pressure from existing holders or conversion of various preferred stock instruments, which can constantly hang over the common stock price like a dark cloud. The volatility is also reflected in the high beta of around 4.48, meaning it theoretically moves 4.48 times the market average, making it an incredibly high-risk proposition, a far cry from the stability you might look for in established large-cap names like Apple stock or Tesla stock. Corporate structure and capital pressure. The true challenge for Hyperscale Data lies in its historical classification and its complex corporate structure, which is constantly undergoing a metamorphosis. While the headline news focuses on NVIDIA GPU cloud services and Bitcoin mining, the company has a background in diversified holdings, including previous segments in crane rentals and other industrial areas, a legacy that adds a layer of complexity and perceived instability. The company is actively working to spin off its diversified holding company subsidiary, ACG, a divestiture expected to occur in the second quarter of 2026. This move is designed to make Hyperscale Data a pure-play AI and digital asset company. This is an absolute necessity to align the reality of the company's business model with the market's expectation of a high-tech stock. However, until that spin-off happens, the market is discounting the AI and Bitcoin story because of the complexity and the inherent risk of a holding company structure, often associated with lower valuations. Furthermore, the constant issuance of shares, complex preferred stock conversions, and debt reduction maneuvers, like the recent $30 million debt cut, while positive for the balance sheet long-term, create continuous overhang and dilution concerns for the common shareholders in the short term. The large insider buying activity, while suggesting confidence for management, is often offset by the constant need for capital, a tension that keeps the stock pinned down in a trading range far below its 52-week high of $9.98. Investors looking for a stable investment vehicle, perhaps through a platform like Fidelity or using a service like Schwab Intelligent Portfolios, are likely to steer clear of this kind of capital structure complexity. The business model: AI, mining, and colocation. The core business model, once you strip away the legacy assets, is centered on its Michigan facility, a large-scale data center. It has three main revenue streams: Bitcoin mining, offering colocation and hosting services, and the newly announced NVIDIA GPU cloud platform. The expansion of their Bitcoin mining fleet, especially replacing older S19j Pro miners with new S21 Pro miners, is a significant operational upgrade. It's an efficiency play, aiming to double their current Bitcoin production. The entire goal is to build a massive Bitcoin treasury, not just for hodling, but as a store of value and a strategic asset that will eventually represent 100% of the company's market cap, positioning them similarly to other high-profile Bitcoin-centric firms. Simultaneously, the launch of an on-demand NVIDIA GPU cloud platform, offering access to high-end chips like the H100, B100, and B300, is critical. This is their direct access point to the lucrative AI infrastructure market, which is fueling the growth of companies like NVIDIA stock. This dual strategy is intriguing. The stable but capital-intensive co-location hosting revenue provides a foundation. The Bitcoin mining provides an asset-backed growth story tied to the crypto market, and the NVIDIA GPU cloud aims for the high-margin, high-demand AI services sector. The success of the stock hinges on the market accepting this blend and giving them a premium valuation. Old reports show sales were over $100 million in 2024, but net income was negative, confirming the company is currently in a high-cost, high-growth investment phase. This is typical for small-cap growth stories, but in a tight money environment, it ratchets up the risk. Future outlook: catalysts, risks, and the sentiment trap. The future of Hyperscale Data Inc. is a high-stakes bet on execution and commodity pricing. The primary catalysts are clear. First, the successful and clean execution of the ACG divestiture in Q2 2026, which should simplify the corporate structure and allow for a true AI and digital asset valuation multiple. Second, the successful launch and customer adoption of their NVIDIA GPU cloud platform. Any major contract wins or clear signs of revenue from this service will provide tangible proof that they are more than just a Bitcoin miner. Third, the continued appreciation of Bitcoin's price as their treasury goal is directly tied to it. The risks, however, are substantial and directly challenge the positive expectations. Dilution is the biggest immediate risk. The need to raise capital in a low-priced stock environment can continuously suppress the share price. Execution risk in the AI cloud space is also high. Establishing a successful, sticky cloud service against giants is incredibly difficult. Lastly, the company's volatility and low price mean it remains highly susceptible to delisting risks, even with recent compliance regained. The very high beta value and large daily volume movements we've seen are indicative of a heavily traded speculative stock, which requires an intense level of self-investing, often better suited to active traders using a flexible platform like Interactive Brokers or Robinhood, rather than a set-it-and-forget-it intelligent portfolio. The tension here is that the expectation is for a dramatic breakout tied to the AI and Bitcoin booms, a move that would see the stock reclaim its former high. The reality is that the stock is currently trapped by its capital structure, past liabilities, and the constant need to fund its ambitious expansion. For the stock to genuinely soar, it needs to move from being a story of future potential to a company delivering consistent, high-margin AI revenue that is not constantly overshadowed by capital-raising activities. Until then, the volatility will remain the dominant feature. The recent sell-off, despite the mining expansion news, is the market telling us it's waiting for revenue proof and balance sheet simplification, not just more capacity announcements. Comment below how many shares of GPUS you currently